Hello, everyone. Welcome to today's session. Let's jump right into it. I hope you are all enjoying your summer, and we're still right in the heat of the summer, right in the middle of it, and we've got market conditions which have been pretty volatile here the last few days. And so we'll spend some time going over that and looking at some of the shifts that are starting to take place in different market cap sizes of the market currently. So let's jump right in here with the long-term market trend. We know that our bull market rank sitting at almost 27 now, which it represents this green line right here. So from the overall uptrend, we've been continuing this overall range, and essentially the crossover point right here is measuring that distance away. So we start to get distance away from this crossover point. Once that starts to get to a range that is extended, obviously we need to be aware of that. That's going to mute the upside just a little bit more, just like the downside is going to get muted when we're a long ways away from that center point, that crossover point. And that's where we're at right now. So it doesn't necessarily mean the market is going to collapse or crash or even go down, but it certainly means that we're going to start to see and continue to see some of the activity that we've seen recently over the last few days. What we've seen happening lately, well, I'll wait to get to that. Let's go to this shorter term signal, because one of the things we've seen breadth continuing to improve. That's this green line right here. That green line is now, it had been down in this 46 range. Now it's up in this 75 range. In fact, it's 82 right here. So essentially you've got 80% of stocks in this database in uptrends or working that way in overall uptrends. So you've got a really solid group of stocks now that are moving higher. It's been interesting to see the ones that have been kind of collapsing, and we'll go through that as well. But we've also seen, so we still have really positive bullish momentum. We also have really positive breadth now, still sitting in this buy zone, not extreme to the upside. Sentiment is extreme to the upside, and that, as I've mentioned before, this can hover up here. In fact, I've seen it capped out in this upper range for years sometimes in really strong bull markets. But you can see that it does come down, and when markets are reversing and heading lower, then that's going to be at the bottom end of the range. We're just not there yet. We have had a little bit of a pullback here, but nothing too substantial. This has been more of a market cap shift versus money moving out of the market. It's just money rotating into other market cap stocks. Okay, we'll jump over and take a look at buy-sell ratio. One of the things I wanted to talk about on buy-sell ratio is just the aggressiveness of this move higher. Okay, if I go back, let's go back 4 years on this, and when we have this move this sharp, this fast, it almost never reverses from that spike. Okay, it can come back down and retrace a little bit, but typically you're going to get multiple tests, multiple processes of this moving higher. This one was a relatively shorter one just recently, but even here, almost every single time you get green, which is now up in this upper range, you're getting it for a length of time, weeks, if not months. Okay, so this is going to be a really interesting cycle that we're working on right now to see how much strength we actually get in this rotation, and if it's going to be warranted and if it's going to be justified based on earnings. Ultimately, it's earnings that are going to control what the stock market does, or the perception of earnings. And as of right now, we're seeing relatively decent earnings in this season. So as far as the overall market perspective in that 30,000 foot view, we're in the upper end of the range. We're towards that. We're at 27, but in the shorter term, we still have solid internals that are improving, and that's we still want to continue to trust that bullish direction. Now, my approach with this direction is the position size. Okay, and that is how big of a position size are we allocating into equities? Do we have 100% of our assets in equities? Do we have 5%? Do we have 80%? Do we have 20%? In these, as we start to reach the upper end of these trends, I'm right at about 25 to 35% allocation, and that's hovering back and forth based on stop outs or based on profit taking. But for the most part, what that means is we're taking profits a little bit sooner, and we're using a little bit tighter stop losses on those. That's going to force us to get out of things faster and set tighter stop losses for that same reason, so that we can get out a little bit quicker in those market conditions. The ones that are really going to work are going to continue to work. The ones that don't, and we're seeing that today. We're kind of getting beat up a little bit in the last couple of days on some of these holdings because they are retracing as well with market conditions. So let's jump over and look at S&P 500. We'll come back to some of these other things, but you can see S&P 500 and NASDAQ. Let's start off with NASDAQ because really that's been the one that's gotten hit the most in the short term, and you can see just how quickly that retraced. It gapped all the way back down, attempting support now at that 236. We'll see if we get some buying interest coming back into some of those names, and support could potentially come all the way back down to that 475 range. We're in a range now of a dip buying potential for the NASDAQ. It's a pullback into that range, but we want to start to see some support happening right here. That may or may not happen. We've had a nice run here, but more than likely we could consolidate some of these gains. We really haven't had on this 1 year time frame. We really haven't had much of a consolidation time frame within this last 2 or 3 month uptrend. This is really the first one. So if you look at it from this perspective, it just doesn't feel that that chaotic, although it certainly has been with some tech names. So we're seeing that in NASDAQ. We go over to the S&P 500. We're seeing a similar type of retracement, but not nearly as aggressive as that NASDAQ chart. 551 is support right here, and we can start to be watching for some support happening on some of these names. Some of these names that are driving this price pattern lower are Microsoft. Microsoft's got smacked here back down to 437 and back down to that corrective zone, that 382. Remember that this structure, if we think about this price structure as just this part of the chart, if we're just focusing on this part of the chart and we're using a 6-month time frame, then these lines that are drawn here are creating a structure. They're creating locations where we're looking for supply and demand locations. Okay? And oftentimes they'll be close or near to a zone or a range that should start to hold up. This 382 becomes a significant support area, and that's what we want to look for those. We want to know that, okay, the 236 has broken down on Microsoft. That typically means that it's not going to be trending quite as easily right now. That potentially means it could start to break down. So in most cases, we would have been stopped out of a trade like this. If we were in Microsoft, we're following this 6-month time frame, it's continuing higher and it's consolidating, and then it doesn't move higher, but ultimately it moves lower, then we're going to stop out of a trade like that, let it find its footing, let it find some ground again, and then ultimately, if it doesn't, it continues to move lower, then we're out of the trade at this point. If it does find some support and start to work its way back up again, then probably around this range is going to be where we're going to be interested again. So as of right now, this makes it easy for us to be able to manage, well, what should I be doing? Should I be buying into Microsoft or not? Okay, at this point, that's a little bit deep in that retracement. We want to see some confirmation, at least, again, based on the momentum strategy. So Microsoft is one of them. Amazon has also gotten beat up right here, and Nvidia has also had some retracement. So Nvidia is actually back down to that sell range underneath the 236 area now, which is right here. So now Nvidia's got some resistance coming up, and a significant resistance here and here as well. That doesn't mean that this uptrend, this longer term uptrend, is over. It just means that we're dealing with this again. It means that we're dealing with a correction, a counter trend. And what we don't know is we don't know if this is going to become aggressive to the downside, or if it's going to find some support and get back up into that trending or back up into that momentum zone. So once again, you're looking at a chart and you're saying, hey, should I buy Nvidia right here? Well, based on momentum, we want to wait just a little bit more for additional confirmation for it to move back up into that momentum zone. I've talked about this the last few sessions, and that is on these longer time frames. Okay, when you look at a pattern like this and a trending stock, this is These are the zones, these are the patterns that we want to be able to get into. We also deal with whipsaw. A whipsaw is when you get a new entry or you get the stock moving back into that momentum zone or back into that bullish trending zone, and then it fails, and then it reverses back down and ultimately stops out of those trades. The benefit, the benefit is it gives us the stop losses are relatively tight, okay, 8 to 10% in most cases, sometimes even less than that, in exchange for trying to catch that trend. And sometimes that takes a couple of stop outs in order to get into that trend, okay? But as of right now, if we were just to look at this chart, this is the 2-year time frame I've gone out to now, and we could say, should I be buying this dip in Nvidia? If you are a dip buyer, okay, then yes, you're looking right here at support. A lot of guys are buying at the support. You get a lot of institutions that will find the support ranges, and when it gets there, they're buying exactly at that point in anticipation for more upside. That's the earliest possible entry, and you can still do that. You just have to manage your risk down here a little bit. Your stop losses are still going to be in place. You're still going to follow the process of what is my risk. So even in this case, let's just say I wanted to buy Nvidia today. I don't care what the price is doing. I don't care what the chart pattern looks like. If I wanted to buy it, I still want to use proper money management, proper risk management. So I would come in here and I'd say, all right, number of shares. If I do 100,000, if I've got, I don't know, if it's, what are we at, 10 shares, let's go 20 shares. So 20 shares, let's go 18 shares. So that puts us right around 2%. Well, I still want to control this number and have this portfolio at risk and my portfolio at risk once I've added a stop loss to be around 0.3 or less. Okay, so I want it to be less than 0.3, that's a 3. 0.3 or less. So let's add a stop loss in. Where would be a realistic or reasonable stop loss location based on the price? I would want to go below that next rung in that Fibonacci scale, okay? That Fibonacci ladder, the 382 level. So that's going to be 108.65. Let's do 108.50 and see what that looks like. Okay, so 108.50, that puts us at 0.2. So $200 at risk. So if I wanted to try and take a stab at Nvidia at support right here and still manage my risk as if I'm doing it on a momentum trade, I still am going to do the money management process doesn't change. I still have to have a stop loss. I still want to have position size. We're just changing the entry a little bit. You can certainly do that based on your own experience, based on some of these other things. We know that there's some support right here. It's a 3-part counter trend. It's a little more risky trade because it could dip back down. But in this case, you're willing to say, okay, I'm willing to try to get in a little bit earlier here. But I still want to make sure that if it doesn't work, that I know where my risk is defined. Okay, so in this case, it's at 0.20. Okay, so I could go ahead and enter into a trade. Same process, just slightly different entry mechanics, and that gives you even more flexibility, particularly in really bullish markets like this, on really high quality names like Nvidia, and looking for a possible counter trend and support area. Okay, so the momentum strategy, that's the first and foremost, because we're dealing with more resistance now. We want the path of least resistance. Okay, the path of least resistance, once that momentum is starting and you get a breakout, is going to be higher. We have resistance here, we have resistance here, we have resistance here, here, and here. So we've got resistance, 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 resistance. Before it even can get back up potentially into a momentum zone, we're running into resistance. So we're just asking for more potential trouble to try and get it to get that early entry. The payoff is that we get it right to the penny. We pick the bottom exactly in the shorter term, and by the time it even gets to momentum, we're already profitable and maybe even can take some money off the table. Okay, so those are a couple of really early entry strategies to consider if you're looking for a confirmation. The one other caveat with that is, if you want to wait a day and try and get a little bit more confirmation out of that give it, if this bar were to close positive or if this bar were to close above the prior day, something that's giving you a little bit of indication that there's some support there. It's happening almost a little bit right now. You've got a bottoming tail bar. Okay, that bottoming tail bar means it opened, it traded lower, buyers came back in and are pushing it higher. And ideally, you get a hammer, that bullish hammer pattern when it closes like this, and if that were to turn into a bullish day and that hammerhead were to be up above that prior day, right at this support area and a stop loss here, that would be an early entry attack to be able to look for. Let's see if we can find any others right here. In fact, that I usually don't cover this, but that's one thing that in the reversal strategy pattern, if you click on this, it takes you actually over to patterns that have that. Let's see if these are, let's go into the scans. So these are called ABC patterns or ABC scans. This is an interesting one I was looking at this morning, VST, Vistra Energy, Electric Power Utility Stock. You're getting a lot of these utility companies that have been having these big rallies based on the power that's going to be generated from or needed by data centers and AI. Okay, so you have a stock that's been retracing and it's had a really nice uptrend in this 1 year time frame. Now it's correcting and it's pulling back a little bit. And these deeper retracements can potentially set up for a rally even higher. These are, again, this is an entirely different methodology, but it's one that you can also look for if you're looking for trying to pick up something at a little bit more of a low point or at a support area. But again, here, I'd want to see a bar that maybe looks like this, at least an up day. Okay, give it a day and see if you can get the next bar that can close higher than that. And then you're relatively close, and then you can do the same thing. Where's my entry? Where's my stop loss? Okay, if it continues to trend lower, I've got my risk defined as well. That is always the key factor. Okay, no matter what the scenario is, pull this up, run this number. Oh, I don't have it in here. That's the other thing too, is when you're in this reversal mode, you have a whole new set of portfolios, a whole new set of watch lists, a whole new set of everything. So sometimes we get questions be like, hey, I can't find my portfolios. They're all gone, or my watch lists are gone. Make sure that you're over on this other setting here as well. But let's scan through some of these and see if there's anything that's actually bouncing. So there's Nvidia. So Nvidia actually is pulling in to that counter trend buy location. It's a reversal pattern, early entry location to look for these setups. Sometimes they're a little bit earlier. Most of these have still got, here's CrowdStrike, which is also a big AI stock. A lot of those have just gotten pummeled. And again, I would stay clear of these because once you get that selling, something else is starting to work. And now you've got a lot of resistance to deal with. But again, lots of different trading styles and trading methodologies. Here's Dell Computer. Once again, for those retracements, at some point you're going to get some support. This is called a counter trend ABC pattern or a three-part. Most uptrends will go up, and then three-part counter trend ABC. Find some support at one of these ranges, and then if it's going to continue higher, we'll start from there. Just a couple of other additional ideas for you on a retracement early entry move. I don't spend much time over there just because I prefer the momentum strategies. Anyway, okay, let's see. Let's jump over here and jump back to sectors, okay, because we are seeing really solid across the board with sectors other than technology. Okay, that's the one that in the last week you can see it's down 5% and almost everything else is up 5% or 6%. And we've seen basic materials here as well have a really nice retracement move and starting to move back up this 6-month time frame here. I'm going to switch back to this perspective. Basic materials, IYM is the trade there. I'd mentioned this before. I'll mention it again. Sometimes when you want to look to see what is, what are the stocks that are included in that base material iShare. The iShare is just the company for the ETF. I can go out here to more and to news, and this actually takes me out to Yahoo Finance. Then over here on the side, I can click on holdings, and this is going to show me what are the top 10 holdings of this basic material stock right here. And then you can see, oh, okay, there's some good looking names in there. It's one of the ways to be able to diversify out. You're getting Nucor Steel, you're getting Steel Dynamics, you're getting Ecolabs, Freeport McMoran. These are some fantastic names that you can own the bulk of those by owning just the one ETF. And same with lots of these other sectors as well, the leading sectors to say what's working. Well, financials has gone gone ballistic the last few days and had a big breakout, some retracement, more than likely in anticipation of interest rates coming down. Financials and banks are not making money right now when interest rates are the way they are. They need a different yield curve in order to be profitable, and the anticipation is that yield curve is starting to shift. Again, it's all anticipation. That's the fascinating thing about the markets. It's always in anticipation. Markets are always looking forward. Okay, information that is known or anticipated is being factored in real time. People are making, large billion-dollar institutions are making decisions with their money. That's what I want to follow. I don't want to follow somebody that's just talking about what may or may not happen. I want to watch to see what is happening and what is moving in the price activity in these major major ETFs and major sectors, because that's where money is moving. So you're seeing lots of money moving into financials. The other interesting thing is you're also seeing lots of money moving back into small cap. If you go to the market ETFs tab, and Russell 2000 is now leading. Russell 2000 has had a really big pop. So you've got banks and you've got small cap stocks that are surging right here, and they're moving out of a lot of those tech names, or at least those big heavy hitting tech names. That's not going to stay. That's not going to sell off forever. Those guys are going to recover because Google, Microsoft, Amazon, Nvidia, they're not going anywhere. They are the players, but the stock price is a marketplace. Okay, the stocks are always run by all of us hotheads, right? We're making decisions, and half the time it's by the seat of their pants, and it's like we're jumping in this, we're getting out of this, we're trading this, we're going to run something way aggressively and then get the greed side of it, and then we get the fear side of it moving down. But ultimately, over time, you get a lot of that volatility, but over time, it's gradually getting the ups and downs, but we're ultimately trending higher is what we want to try and participate in by and large. Okay, so a little digression there, but it's one of the ways to look for some of the diversification. Sometimes we get a lot of users that are like, there's so many stocks and there's so many picks and there's so many things to choose from. Well, one of the ways to get around that is just focus on the ETFs. That's why everything on the site is an ETF or a stock for the most part, because it's all tradable. I could say, I just want to own the Russell 2000. I want to own all these 2,000 companies all at once. Okay, buy into that ETF. Same process. One of the disadvantages, though, is that sometimes they don't trend quite as well as an individual stock, an ETF, but that's the trade-off. Is the more diversified you are, it mutes the performance to some extent. Because you got the average of 2,000 companies now, the average price. That's going to take away some of the real big winners, but it's also going to take away some of the big losers in that group as well. Okay, so just this muscle ETF tab. You're also getting a whole bunch of different names in here, or different styles of ETFs. You're getting the 3X, so regional banks 3X, FAS right here. This is also a leveraged ETF, 3X. Okay, so anytime you see 3X, it means that the finance sector, which is moving higher. Let me actually go back to this 6-month time frame. So the finance sector, if I were to go to the sectors and back to this area here, IYF. Okay, if that's up 0.95%, then FAS is going to be up probably double that. Okay, and that's the case. That's what the 3X, or three times that. So the 3X is 3 times the average, 2X is 2 times the average, and so forth. Okay, and you're getting a lot of different, there's a lot of ETFs that are out there now, and lots of different ways to be able to trade that. Even small cap TNA. Here's another way you're getting 3X on Russell 2000 essentially. So if Russell 2000 goes up 10%, this thing's going to go up 30%. Okay, we'll look at where did my drawing guy go? Here, let me get him. 1 second. There it is. To move that out of the way. Look where we are this week. Okay, 30%. So the financial sector has probably gone up 10%, and this small cap bull, or not financials, but small caps have gone up 10%. So the 3X of that has gone up 30%. So you are getting diversification, and you can then get the leverage associated with that. These are particularly utilized for trading methods instead of really longer term investing, because the ETFs, they mark to market every night, meaning they reprice them every night. So sometimes you just get a little bit of slippage. It doesn't get the real true price value, but by and large, it's close enough. Okay, but you can see we've had a big run up here as well. Certainly due for a pullback. That's what we're starting to see happen. So in terms of perspective, and should you be, bailing out? I don't think so quite yet, based on the fact that we still have a really strong buy-sell ratio, and we didn't see a whole lot of fear. Okay, we haven't seen a whole lot of fear coming in with that sentiment. One other place to look at fear is to look at indexes, and then this very bottom one, which is VIXY. Okay, and this is really a fear indicator. It's based on the VIX, and the VIX is essentially the extrinsic value of the S&P 500 options, okay, put options. So when you look at this chart and you see a spike, you're getting a lot of investors buying S&P 500 put options. So they're hedging against the downside. Okay, and when that really starts to spike and you see a lot of fear come back into the market, it moves pretty quickly. It moves pretty aggressively. We're just not seeing that in the last day or two. A little bit today, 3%. That's a little bit more elevated, and we could see some follow through on that if we do get some acceleration into the close. But in terms of this being a major top, it certainly could start to be the case. But we've just seen that money rotating from one area into another area. Okay, we're seeing Dow. Okay, we're seeing the Dow stocks have a big run up here. Okay, Dow's had this big breakout. Dow was kind of pausing here for a little while. So as it's been moving the last 3 or 4 days, moving higher, as S&P 500 is pausing a little bit. Okay, so watching for these sector rotations, keeping an eye on the commodities as well. Commodities, we've got gold, which is moving. Come back to the 6-month time frame here. You've got gold, which has had this breakout. You've got USO, which is also working in this upper momentum zone, still trying to continue higher. And then you've got a couple of others. Silver, which we've been watching recently, a little bit of retracement, still in the momentum zone. This also becomes that perspective when things start to if we're in a trade already and we start to see this starts to become our decision point to say, are we in the trade? If we're in the trade, we've got to decide if we're getting close to a stop out or if we're going to just exit the position based on additional risk, based on the fact that I don't want to wait and see if it's going to find some support or go higher. Okay, so it's a little earlier than the stop location, but it's also a way to say, it is now the time to preserve capital, particularly if you're in a market like right now, and we're trying to focus on trying to keep this number at around 25 to 35%. That means I want the bulk of my money in cash still. Okay, cash is earning 5.5% for just sitting there. Okay, I want to have some in cash because it is safe. Number one, it's not going to move anywhere. It's not going to have any volatility at all. I don't want to be in bonds. I don't want to be in anything else with the bulk of that. I want cash because that's a decent rate. Okay, maybe a little bit lower, 4.5 to 5%. Depending on the bank or the money market account or whatever that case may be. Okay, so in this case, we actually got stopped out of 3 trades yesterday and sold partial positions into a couple of days ago, just to try and maintain that holding as of right now. Now, that is my trading plan for this portfolio. You may decide, hey, I want a little bit more cash than that. Okay, that means I'm probably going to have a little bit wider stop loss, or I'm going to enter into larger positions. Instead of 2 to 2.5%, maybe you're up to 3 to 3.5%. Okay, and that's 100% fine as long as you've got it structured into your trading plan so that you know. That being said, if you run out to the Learning Center right here, and I'm doing some changes on this to make it a little bit more clear, but one of the places to go is if you go into the TradersPro training and the 4 simple steps, down here there is a trading plan document, okay? And this can essentially give you that starting point to say, what am I trading? What time frames am I trading? What setups will I trade? Market conditions. I want the BSR, I want the buy-sell ratio above 1. I'm only buying new buys. With all the trends are up, 98 ranks or higher. okay, buying or 90 or higher, or 80 or higher, or okay, whatever those criteria are, the tighter the parameters or the looser the parameters, you're going to structure those inside of your trading plan. What are my setups? What are my entry rules? I want market direction. I have buy sell ratio of 1. Okay, all orders will be a buy limit order before the market opens, with a limit price, which is don't buy if the price is higher than this, and then place my stop loss. Where will I place stop loss? My stop loss prices will always be determined prior to the entry. I never want to enter a trade without knowing where my stop loss is going to be. Okay, here are some ways to manage stop losses. Bar by bar. That's the most tight stop that you can use. That is, every day you adjust your stop to the low of the prior day, the low of the prior bar. Okay, or the low of the most recent hold, or below the Fibonacci 236 on a 6-month chart. This is the one we use most of the time, just because it allows for the most flexibility, the most volatility range. Okay, but inside of the Learning Center, under the training, it's down a couple tabs, and this 4 simple steps, and then the trading plan. I'm gonna, like I say, I'm adding some additional steps here so that it's a little bit clearer. But if you're not utilizing a trading plan or need to get access to that template, just simply go there. Then from here, you can just copy and paste it, the text, and then edit it however you would like to from there. Okay, on that, I am going to end on that note, and appreciate everyone's time and effort today, and we'll see you next week. Have a fantastic weekend. Thanks a lot. Bye now.